You're watching Business Today Television. I'm Sakshi Batra, and this is the Budget Special Edition where we're going to be focusing on the big expectations that the insurance sector, the fintech, and the startup sectors have from the upcoming Union Budget 2025, especially for the insurance sector. It's been pinning high hopes on the upcoming budget, and it's keeping its fingers crossed regarding the expectations from this most important financial documents, ranging from tax breaks, GST relief, also about opening up the sector with higher FDI coming in, and various other measures. Now, how much of it is being expected? What can truly come in, and what can be a transforming reform coming in from the budget document is something that we can understand from the top management of PB Fintech, now joining in for this special conversation. Mr. Yashish Dahiya, the chairman and the CEO of PB Fintech, is with us on the show. Warm welcome to you, Yashish, and thank you so much for taking the time out. You know, you belong to a sector which is largely in discussion right before the budget. Everybody's pinning their hopes on long time demands have already been done. You know, many times over many years also, the tax break demands have always been there. Relief on some of the insurance products and some of the GST relief has always been there. But what truly do you think is feasible for the government to do in the upcoming budget this time?
There is actually a very easy solution which would solve 90% of the consumer's requirement.
Okay.
And that is health and term insurance. These two products only should be having very high and exclusive exemptions for consumers to purchase these products. We have to appreciate these two products are only about 20% of the overall insurance pie. And within them, in the life insurance, health insurance already has a separate carve out, and term insurance is less than 5% of the total life insurance budget, right? Or the total life insurance spend. So if a specific tax break is provided to term insurance, that segregates it from the remaining savings products. And that becomes very useful to the consumer. And it also indicates to the consumer they can have a separate spend for term insurance. And I know that as we are moving to the new format of the income tax regime, in which more and more of these are in a way going away, I think term and health must be retained, and they will not impact the exchequer much.
Right.
And some of those benefits, instead of giving an overall increase in the life insurance, because see, if you just do an overall increase in the life insurance part, most of that would go to the investment side anyway. And those products can be compared to a mutual fund or a fixed deposit. They do have a very small insurance component, whereas the term insurance is 100% protection only. And thus, that part, has thus far not received that special attention. I think the second thing I would say is, see, a lot of startups have employees who are first generation people. They're not like other founders, other, people who have 5 companies and, one company pays for another company, etc., etc. And thus, ESOP taxation forces these people to sell their shares and not hold on to their shares. And that means as the economy develops and as their companies develop, which are arguably revolutionary, disruptionist, etc., they end up retaining a smaller and smaller share. Anyways, management typically has about 10 to 15% of the company in these startups, because they never had their own money. They had to raise money to kind of build these companies. But of that also, they have to sell roughly half just to pay the taxes. Actually, I've done the math, more than half that you need to sell, because you first need to pay the taxes before as you exercise, and then when you sell, you pay the capital gains tax again. So I think the taxes must be paid, but if they can be moved to sale of shares rather than upon exercise of shares, that can be a very big benefit to the Indian startup ecosystem.
Fair point. Yashish, there's also this clamor about how 100% FDI in insurance should be done. Will it find its mention in the upcoming budget speech? Do you think it is the need of the hour for the sector Will it really open up the industry a lot more, paving the way for significant capital inflows that's needed?
See, I think the simple thing is India requires capital, it requires investment. And I genuinely don't see the difference between 74% and 100% FDI.
Okay.
So I think it should be done. And I think there is clearly people out there who will only enter when they have 100% because they do not, want to have a different management. They want to have their own management, they run things their own way. And of course, there is the regulator, so they will have to follow all the regulations. And they will have to have appropriate capital to protect the Indian consumer. So I think 100% FDI, there is no harm in 100% FDI. Today, capital is required. And if it helps capital, we must definitely do it. So I don't know why we should slow it down.
Right. Another aspect that everybody is probably looking to, understand is whether the government will be creating or unveiling some kind of a framework for composite licenses, allowing insurers to offer multiple categories of insurance, life, health, general, all under a single license. Even the insurance agents probably allowing them to sell all kinds of policies, even from different companies right there. What is the expectation on that front? The government has been doing a lot of meetings with the stakeholders right there. You would understand it more than us. Help us understand which way is this going to go and will it be transformative for the industry?
I think it's a debate. From a personal perspective, I would love composite license to be there. However, specialization has its own benefits. And I will share a very, sometimes this is counterintuitive. But if you think about it today, more than 2/3 of the retail health insurance policies are sold by the special health insurance specialists. Now, arguably, the entire general insurance sector has got much more capital than the health insurance sector. However, that has not built up as much health insurance. And the reason for that is because they could do 10 different products. Maybe the focus was limited on health. Whereas because specialist health insurance products could only do one product, they had to do that product and they grew in it. They didn't have an option to not grow in it. So I think the jury on this, it's not as simple as it seems at the face of it. And I'm not the expert, so I'm going to, while I clearly said personally it benefits me if there is composite license and it benefits my company. However, I think this is a more nuanced subject. There are specialists out there, and there have been places where composite licenses were provided, and because people got into areas that they did not understand how to operate in, that created those companies to go bust. Okay. And of course, the consumer suffered in the end. So it is not, all I'm trying to say here is, it is not as simple an answer as one may expect at the face of it. I'm not the expert, but I'm aware of the multiple nuances out there. And this perhaps requires, some expert committee to really understand how this functions and how specialization versus generalization in insurance can have different implications.
Right. Yashish, you rightly pointed out, also very importantly that we need to keep the customer, the end consumer in mind when we are developing these policies and making these amendments right there. So far, of course, companies like you, digital first companies, have created that awareness. People have now come to understand that life and health insurance are absolutely essential. You cannot live without them. Many places it is also mandatory, but some there is not. There is a lot more to do. But do you think this is the time that the government and the union budget should probably focus on modernizing the regulatory framework to probably improve the customer's experience, probably simplify the claims process? That's where most of the consumers get stuck at. Is there any way how government could simplify adopting digital first strategies, lowering the operational costs, reducing the claim settlement ratio? How do you think the government can do that? What measures are needed?
I think, again, very complicated subjects and no straight answers. And I don't want to, downgrade the question by giving it a very simplistic answer. See, if you look at life insurance, it is more straightforward to settle claims because it is a black and white outcome, right? Either a person is alive or the person is dead. However, when you look at general insurance, most of the claim settlement is actually happening in garages or hospitals. And that is where lots of complexities start arising. Secondly, see, this is not a very simple product. I cannot, what happens if you have purchased the product saying you do not have an illness, but you actually have that illness? And because the moment you say you had that illness, your cost is perhaps 2 or 3 times more than an average consumer, right?
Right.
So why are the claims getting delayed at a fundamental level? They get delayed because the insurance company is checking 2 facts. Number one, has this customer told us something which was untrue? And the second thing is they're checking if the hospital is overtreating, overcharging, or in collusion with the customer.
Yeah.
Right? Now, the problem with this mechanism is you basically throw the baby with the bathtub, because the genuine customers suffer. If you have 2% fraudsters, the 2% fraudsters are breaking. Please appreciate, in insurance, the premium is only 5% of the sum assured, or maybe 2% of the sum assured. If you get 2% fraudsters, you spoil the entire budget of the insurance industry. And to catch the percent fraudsters, 98% of the people suffer. That is the problem. This does not actually have much to do with technology, by the way. The technology exists for insurance companies to settle claims instantaneously. I think this requires a lot more than that, which is alignment of interest. Mostly this is handled by something called FNOL, First Notification of Loss.
Okay.
If you look at it, if you look at the government schemes in India or abroad, all of them ensure the first notification of loss is to a general practitioner or to the insurance company. Because without that, you cannot control costs. And whether it is the NHS in the UK, you go to a GP first. Whether it is ECHS, whether it is CGHS, you always go to a general practitioner first. You don't straight away walk into a hospital because you cannot control the cost. So I think it's very important for the regulator to fix that. That, look, a general practitioner view is required, and bring back the general practitioner into the story. Now, how that happens, what the regulatory framework is critical. But without that, you have a cost which you just can't control. That's the reality. None of the companies are super profitable. Let's understand that. It's that, and the claims ratios are quite high.
Yes. Absolutely, yes. All of those points I've noted, and of course, there is no simple answer, like you said, Yashish.
The simple answer does exist. See, the simple answer does exist. You have to bring in the general practitioner level. You basically need to align the consumer and the hospital networks. How do you align the consumer? You either have a copay or you have, some level of deductible. By the way, deductibles do not cost a lot, but they can benefit the consumer a lot. Let me explain this to you very simply. If you bought a 10 lakh rupee product policy, it will cost you, let's say, 20,000 rupees.
Yes.
If you took 50,000 rupee deductible in that could bring down your premium by 10,000 rupees and make it just 10,000 rupees. Now, if you can pay 20,000 rupees in premium, you can also pay the first 50,000 rupee of your bill for the whole year. It's just the first 50,000. And by the way, the coverage from 10 lakhs to 1 crore. So if you let me give you two examples, right? You take a 10 lakh rupee product, or you take a 1 crore rupee coverage, but 50,000 rupee deductible. The 1 crore rupee coverage is much, much cheaper than the 10 lakh rupee coverage without deductible. Now, what are you, consumers, supposed to protect? The first 50,000 or the last, the serious illness? And I think the consumers need to become party to this. The second part is the general practitioner. If you visit a general practitioner, he or she informs you where you need to go, which doctor, which hospital. You are suddenly in control of the costs. Otherwise, you're not. You are going for malaria to a tertiary care hospital and sleeping there in the ICU, sending WhatsApp messages to your friends. That is how waste happens. And nobody can afford that waste.
No, fair point. There are these loopholes, and one really needs to find out how these can be checked. And the suggestions that you're giving is something that the government could probably get through. What else? The government has already come up with this ambitious plan of insurance for all by
Yes.
2047 vision. Um, at this pace, what else needs to be done so that at least that ambitious target is achieved? And we're
So,
still a very
Sakshi,
low percentage.
when you speak about the consumer, you rightly pointed out there are two products every family needs to have, right?
Yes.
Health insurance, term insurance. Why am I requesting for segregation of term insurance? Because I want special focus on it. It is the same point as composite license and health insurance specialists. Health insurance specialists have created the health insurance business in India. If you create a separate area for term insurance, it'll bring focus on term insurance. Today, it is part of a whole thing, and probably the harder part, because in this, the claims will be high, underwriting will be hard, right? And thus, from a commercial perspective, the focus will always stay on the savings products. I also say bring focus on the pensions product, right? It's a very important need. We are a young nation, but we are also going to get old. And as we get old, a nation without pensions is very, very painful. Europe is facing that right now, right? And we'll have a huge amount of people because of all the spending and the credit card spending and the unsecured credit that young people are taking and not saving enough. We will have a huge problem on the pensions side. So incentivizing that behavior is very, very critical. And providing decent tax breaks on that is very critical. Because, these tax breaks, how a consumer thinks about it is he says, I have this tax break, I must utilize it. And thus he makes the investment. So it's very important to leverage these, according to me.
Fair point right there. Yashish, this is a topic that really warrants a long discussion, but for paucity of time, we'll have to wrap it up at that. But, we'll definitely expect you to please give us time during the budget day and post that as well to help us finally find out whether the expectations were met. Are things going in the right direction or not? Thank you so much, Yashish.
I'm nobody. I just have some simple views, but thank you very much for giving me the chance. Thank you, Sakshi.
Thank you so much, Yashish, for being with us on the show, and all the best. We'll see you soon.
Thank you. Bye.
All right, viewers, we'll wrap it up at that. Well, budget conversations will continue throughout the course of the day and the week up until the budget. So you'll keep on hearing from industry veterans as to what are the big asks from this time around the budget 2025 and what is the need of the hour. Will the common man finally get the benefit as to form the budget speech contains this time? So we'll continue to get you all of those insights. Stay tuned for all of those on Business Today Television.
Hello and welcome to Business Today TV. I am Chetan Bhutani. I have the Kia Ceros with me and I'll be driving it around and I'll be telling you how good or bad the car is, of course. But I'm also going to tell you how the Kia Ceros will be literally hottening up the sub 4 meter segment, because remember, the entry level, the hatchback segment is declining, but the compact SUV segment is year on year seeing